All right, guys, back to work tonight. Time to get back after it. It's Tuesday evening, after all. It's October the 6th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, my job tonight is to help us find the best trade setups for tomorrow. That's Wednesday's trading session. I got a jam-packed video in store for you guys and gals tonight. Charts are all prepped up in the background, as you can see. Got the E-minis, we got the oil, and we got the gold on our radar in tonight's video. Boy, speaking of tomorrow's trading session, lots of big moves to finish off today's trading session. That sets up some big opportunities for us on Wednesday morning. I have a great plan in store for you guys and gals. Got a lot of great setups we're watching for here for tomorrow. Before we jump in, though, and get our hands dirty on these charts tonight, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. That way you don't miss all the good stuff we publish every evening on this channel. And don't forget, if you guys have any questions, you can drop those questions in the comments section below. I'll get them answered as soon as we finish up here this evening. And as always, I appreciate you guys tuning in every evening. If you love this video as much as I enjoy making it for you guys, how about a thumbs up here on this nightly newsletter? So thank you so much for tuning in. Make sure you subscribe. Hit that thumbs up button for me if you guys like the content. And if you guys have any questions, drop those questions in the comment section below. But enough of the introduction, though. Time is ticking. Let's get this video going. Let's check the calendar for tomorrow. Got a bunch of big news coming tomorrow morning as we break our way into the midpoint of this second week of the month of October. As I mentioned in last night's newsletter, we are going into that kind of, it's not one of the lighter news weeks of the month, right? Second week of the month. It's not the beginning of the month. It's not the end of the month. It's not OPEX next week. That second week of the month is always notorious for being a relatively quiet news week. Now, as I mentioned last night, that does not mean these markets will not be moving for us, because there's a lot going on here right now. So you will notice there's not a lot of news here scheduled this week, but we definitely have a lot of known unknowns, a lot of kind of undercurrents in these markets right now. As we talked about in last night's newsletter, right, the U.S. President Trump, right, leaving the hospital, right? So Trump, of course, leaving the hospital last night. Seems like everything is going pretty smoothly in the White House today, but that is definitely going to be, as I mentioned in last night's newsletter, the U.S. President Trump leaving the hospital, back to the White House. Did he leave too early? Are there complications, right? Does that happen? Does everything go smoothly? Does he beat this thing? These are the questions that are on the minds of traders. And as I mentioned last night on the newsletter, right, if things go bad, if things go good, boy, what a wild card for how the markets, right, treat the lockdowns, treat the stimulus, treat the election. So as I mentioned last night, one of the biggest kind of known unknowns this week is how will the U.S. President Trump, how will the rest of this week go? Obviously, we all hope for a speedy recovery from him, right, but markets will be watching closely, right, to see how the rest of the week goes. We're also talking about stimulus. Well, I guess we're not talking about stimulus anymore, are we? We heard a few hours ago from the White House that the U.S. President Trump apparently has instructed one side of the aisle, right, the Republicans, to stop negotiating on stimulus. So it sounds like stimulus is dead on arrival right now, and I would assume that's what's causing these markets to roll over. It doesn't sound like there's any breathing life back into that for the rest of the week here, so that might be crossing that list, right? We might cross that item off our list here for this week, but that was something we're watching for this week. And then don't forget, right, get a hurricane we're tracking here as well, right? Hurricane Delta, supposedly right now just crossing into Mexico, into the Gulf of Mexico, and is supposed to be making landfall on the southeast of the U.S. Thursday evening, Friday, and then of course continuing into the weekend. I think everybody's watching closely, especially crude oil traders, to see how much that hurricane does really accelerate and what the next couple days are looking like on that. So those are kind of the big known unknowns this week. Again, second week of the month, relatively light news week. How will the rest of the week go with the U.S. President Trump, right, coming out of the hospital from COVID-19? Obviously, we wish, right, him the speediest of recovery. But how this goes the next couple of days will definitely be a very big wild card for the market. And, of course, the hurricane, right? A lot of times these hurricanes, they fall apart. They don't do very much once they get towards land. So we'll see what happens the next few days. Oil has been very bullish the last couple of days because of it. We'll see if that continues, right, as we go go into the rest of this week here. So we'll definitely be monitoring those closely here as we go into tomorrow's trading session. Speaking of tomorrow's trading session, what do we have on the calendar for tomorrow? There are pretty much only two news events tomorrow. You've got the petroleum status report for all you oil traders. Don't forget to trade around that news report tomorrow. I'm not a very big believer in trading the inventory report. There's way too much gambling that goes on. It's tough to get good fills. It's tough to get good entries and exits. So I try to stay away from that weekly inventory report. My cutoff for trading oil on a Wednesday is about 10:15, and then I'll wait until about 10:40 after that news comes out, right? So 10:15, sitting on hands. After 10:40, right, 10 minutes after the news comes out, then we'll get back after it, right, in our trade room, trading on the oil. Most important thing, please don't be gambling around that oil report tomorrow, but it definitely does have potential to move that market, right? Crude oil tomorrow morning, so we definitely will be watching the wake, right, the response to that inventory report at 10:30 Eastern time. And then, of course, you got the FOMC meeting minutes later on in the day tomorrow. As I mentioned last night, I don't expect the markets to be waiting on that too badly. We've heard plenty of information from the Fed over the past few weeks here, so they pretty much have told us time and time again they are willing to keep this economy propped up. They're willing to keep feeding fiscal stimulus. We continue to hear Fed speakers talking about more money going in, more stimulus. So there's very little hiding in those FOMC meeting minutes that I would assume these markets would be surprised by. But there is a news report tomorrow at 2 o'clock Eastern time. I wouldn't hold your breath for a big reaction to the FOMC meeting minutes tomorrow. What I would definitely be looking for tomorrow, though, are further updates on the hurricane, further updates on the U.S. President Trump, right, and how the markets are responding to that. That appears to be the bigger, more important variables here for tomorrow. Now Thursday, don't forget, I will not be here to send out the newsletter on Wednesday and Thursday night this week, right? So please be aware, this is my last newsletter of the week. Got a holiday on Monday, so I'll come back next Tuesday. I know, how crazy is that? Always hate to leave you guys hanging, but be aware though, right? We know the plan for Wednesday. On Thursday, don't forget you got the ECB report on Thursday morning. ECB is early on Thursday. If you're trading the London session, be aware of ECB on Thursday morning. If you're trading gold, trading euro, you really got to be careful, especially on gold when you get the ECB on Thursday morning. So just giving you a heads up on that. And then again, we got jobs on Thursday at 8:30. Those are the two big news events, right, on Thursday morning. And then, of course, as you go into Friday is a holiday. It isn't a holiday. It's the Friday before a Monday holiday, which means half day, right? Half day. Make your money before 11 o'clock Eastern time on Friday morning. Remember, Fridays are early in, early out, right? So the rest of the week here, again, it's inventories and FOMC tomorrow. Again, what I would really be watching tomorrow is hurricane updates, right? U.S. President Trump updates. And then Thursday is all about ECB early in the morning. Careful on gold. And of course, jobless claims, right, will be the big headline number on Thursday morning as well. And then go easy on Friday. Friday has potential to be one of those days where you might get an hour and a half of good price action on that Friday morning because Monday is a holiday. And I do believe the markets are open next Monday. It'll say they're closed, but I do believe Columbus Day, if I recall correctly, is the markets are technically going to be open, but the markets will be very, very slow on Monday. What is that? Monday the 11th or Monday the 10th. The 12th, if I can do my math correctly there. So again, be aware of that. Monday markets will likely be moving, but just be aware it is very much a holiday trading session. And again, no newsletter on Wednesday and Thursday evenings. We'll resume our normal schedule after the holiday on Tuesday evening. And of course, don't forget tomorrow morning, 8 o'clock Eastern time, every morning, Monday through Friday. I would love to have you there right right there with us, trading this stuff together. We open up every morning at 8 o'clock Eastern Time. I'll put all of the membership information you guys need. I'll put the membership links. That way you can come out and join me tomorrow morning at the opening bell, and we can trade this stuff right together. So come out and join us every morning in the trade room. No newsletter, though, for the rest of the week, and enjoy your holiday weekend. Let's get this thing going, though, here, right? We're not in the holiday yet. Let's not get too far ahead of ourselves. So we get some money to make tomorrow. S&P, got some crude, and of course we got some gold here on our radar for tomorrow. Boy, everything puking, right? Everything puking. Gold taking off, oil taking off, S&P's taking off. You would think that the sky was falling right now. Well, it kind of is, I guess, with these markets. You know, they're addicted to the stimulus, right? These markets these days, right? So they're taking the stimulus away. Well, they're not taking the stimulus away, but as I mentioned earlier, right, the U.S. President Trump apparently this afternoon instructing Republicans in Congress and the Senate to stop negotiating on the stimulus, the second round of stimulus talks. Apparently, he's going to wait until after the election and get it done after the election. Very confident gentleman, it sounds like, on his end. So what are we dealing with right now? Boy, gold. What a runaway market on gold. I'm looking to sell pullbacks on the gold. I would expect a range on this gold, so we'll grab a look at it. I got a couple scenarios on gold. Oil is just making that turn right now. We got a bunch of different scenarios to prep for on the crude oil, especially with the hurricane and the inventory report for tomorrow. And then you got the E-minis. S&P 500 is basically a spike in channel right now. There's a mad dash to retest those lows. Let's start today's session off on the S&P 500. Well, they filled the weekend gap, right? Last week, they hadn't filled it all week. This week, they got their weekend gap filled. They're at 45.50. So what happened today on the E-minis here? What happened this morning? Well, as I mentioned, we talked about this last night, right? Yesterday evening, we had gone 1, 2, 3 legs up. We anticipated a range-bound market, and that's pretty much exactly what we saw today on the S&P, right? We talked about 3 legs up, and we talked about how important it is, right, to expect a trading range and how we wanted to be buying below the range with those seller failure patterns. So pretty much as we anticipated on the S&P going into today's trading session. What we were not so anticipating was this strong pump up and that dump back down about 1:30, 2 o'clock here this afternoon. We see a very strong shot going lower. Anytime we see a strong move in one direction, we expect to see that two-legged pullback and that retest of the low. So at this point, the bears certainly are well in control of this market. They filled the weekend gap left from last Friday, and we know we're bearish. The bears are probably, if I can speculate here, I would imagine the bears are probably hunting for some of these lows down here at this 3,300. We spent some time around 3,400 today and yesterday. We're probably looking for that 3,300 level, maybe 3,290 area. If you look left, you'll notice there's pretty much one big range down here. So I'll tell you, this could get a little bit ugly, right? Pendulum swing, pendulum swing, pendulum, whoo, right? You can see that could be a pretty big pendulum swing on the way down. I'm not going to get too far ahead of myself on that. But I do think, though, that 3,300 is certainly going to be a relatively easy to achieve objective here for the bears. You'll notice I've got that measured move down here at 33.13, right? I've got that one leg, 2 legs down. That's kind of where I'm thinking we may find a bit of support here. But, really at this point, we know we're bearish. It's a very strong move down. The bears are well in control, and my job right now is to find a way to get short at levels of resistance. That's my job right now. My job is not to chase after it. My job is to keep looking to sell short at areas of resistance. Now, the hardest part on this S&P is we might keep going lower, and so some of these channels, if we keep going lower, I may have to adjust some of these channels here. So just kind of bear with me here on this. I'm going to do my best with what I have right now. But if we open up at Asia and the mark keeps going lower, what I will have to do is I will have to adjust these channels. You can see this kind of potential. The channel could be even steeper there as well. So I'm doing my best with the information we have right now. I want to find a level of resistance here to get short, because we can easily see the bears have control. My My only concern is we've got kind of like this double bottom right here around that weekend gap. So a shallow pullback, I've got to be a little bit careful on this. What I'd like to do is I'd like to get up around the highs of this channel. And again, this channel, right, might be a bit steeper if the market keeps going lower. You know, you'll notice right now we kind of closed up the session tonight pretty much right at that low. So I'm going to leave that channel right where it is. But, you know, no matter what the channel looks like, the plan I have here is pretty straightforward. The first thing is, if we can pull back to the high of that channel, my biggest obstacle, my biggest concern is going to be, again, seeing this double bottom and seeing that weekend gap right there. So if I can get a pullback to the low of that channel, what I'd like to do is look for a bull trap, right? Look for buyers trying once, buyers trying twice, and sell traps right up above. So basically, it's kind of a classic scenario. If I get a shallow pullback, I'll look for a trap. If I can get a much deeper pullback, though, then I'm not so worried about selling into that weekend gap, and I can look for a buyer failure pattern into a pullback combination. So those are kind of two things I'm watching for here on the S&P. Again, I can see that bounce off that low. What I'm thinking is we might end up going sideways here, and it might kind of go up and go sideways there. I don't want to get caught trading too aggressively here. So what I'll do is, if all we do is go back to that trend line or the top of that channel, what I'll look for here is look for buyers trying once, look for buyers trying twice, and to try to avoid selling very low here, I'll look for a trap to get short, again, above a prior swing. So imagine now those buyers coming in, buyers trying once, buyers trying twice, and we're using that trap entry again to avoid selling too close to that weekend gap. Now, if I can get a deeper pullback, that makes everything easier, right? I've got easily levels of resistance here overhead, plenty of areas I would love to use as a key level of resistance. This would be kind of my favorite possible setup for tomorrow. Nice deep pullback, right? Get the moving average coming underneath it. Get the buyers trying to buy that pullback. Once those buyers get long off the pullback, now we know exactly where their stops are. We know exactly where their pain points begin, right? And now we can simply sell right into those stops. We can use that moving average to sell that pullback with our targets back down to retest the low. So a buyer failure pattern into a seller pullback pattern. Target, of course, always back to retest those lows. Those would be the kind of the two main components I'm waiting for right now. Now, another potential scenario that I'm keeping track of would be a range. Anytime we see this much movement in such a short period of time, what we may end up seeing is we may end up seeing this thing come back, right? And it may, again, I kind of mentioned this double bottom earlier. It may come back in and go into a range here. It may also end up just into a new range down here. So I do want to be aware of a potential trading range, just because anytime a market goes that far, you know, and you could also say too, we're 1, 2, 3 legs down, right? And we talked about a 3-leg strategy in last night's newsletter. So definitely looking out for a possible trading range. If we do see the market go sideways into a range, what would be my favorite entry pattern if we see a range-bound market? That's simple. I want to get above the range, and I want to use a breakout failure. What I'll do is I'll wait for the pop above the range. I'll wait for the buyers in this case try to buy the pullback to the moving average, and I'll look to sell into those stop losses. Very similar pattern than that first big pullback we talked about at the beginning of this lesson. But if we go sideways here, I'm always looking to sell above that trading range using what I call, it's basically a breakout pullback failure. You wait for the price to go above the moving average, or wait for it to poke its head above the range, wait for those buyers, right, to buy the pullback, wait for the pullback, wait for those buyers to come in and confuse this as a reversal and just simply sell into those stop losses for that push back down again, right? So that's called a failure pattern. We've talked about trap patterns. We've talked about failures. We've talked about ranges. Guys, I cover all of these patterns, by the way. We'll trade this stuff tomorrow in our trade room, of course, right? But I talk about all of these patterns in our free trading course. So if you haven't done so already, I would pause the video and grab that little link that popped up there for our free trading courses. The free trading course, you'll learn all my favorite entry patterns, including failures, including traps. You'll learn the entire 3-step strategy. You'll learn the exact same stuff we use every morning in our trade room. Even better though, I'll send you hundreds of examples of how we apply that strategy to our favorite futures markets. If you're serious about your trading career, you definitely want to grab that free course. That link's popped up there in the upper right-hand corner. And again, as I mentioned before, we'll be trading this strategy tomorrow morning in our trade room. You can find all the membership information you need in the description of that YouTube video as well. So now I think we're looking pretty good here to the sell side. We know the plan if it goes sideways in a range. We know the plan if we get a shallow pullback, and we know the plan if we get that deep pullback into those resistance levels up above the top of that channel. And again, I would remind you, if the market keeps running lower, I will continue, right, to keep adjusting down this channel, and I'll still be looking for buyer failures, right, into bear pullbacks. We'll still be looking for those same patterns, right? It's just they'll be a little bit lower on the charts, right? So even if we do end up running lower here, we're still waiting for that pop, those buyer failures, right, in those trap entries that we talked about earlier. How do I buy this market? Is it possible to buy this market right now? You definitely can, but you're going to want to wait for some proof of a reversal. First of all, I would wait for a nice strong pop higher. That's the first thing I wait for. Then I want those buyers to hold that pullback and jump off the moving average. And that's what I want to see for a trend reversal. I'm definitely way too bearish right now to try calling a bottom on this market. I don't care what level of support we're at right now. It doesn't matter. Way too much momentum for the bears to even consider being a buyer. So what I'll do is I'll wait for this 1, 2, 3 reversal pattern. Wait for that 1, 2, 3 reversal. Once I get that reversal, then I can mark up my high. I can mark up my low. And this is where you want to get aggressive, right? You don't want to be too aggressive trying to predict the reversal. I'm not trying to buy that pullback, right? I'm trying to buy that one. Okay, the one down here, this is probably a 35% winning percentage, right? This one's 75 and up, right? So it's a much different scenario. I always like to wait for that follow-up pattern there. Don't try to predict the reversal. Wait for proof of that reversal and then get aggressive, right? So I'm skipping the first pullback. I'm going to wait for that 1, 2, 3 reversal pattern, right? And then buy the low of that hidden channel. Now, sometimes what will happen is these moves, they'll just get bought right back up, right? So for some reason, for example, we see this thing start ripping higher here again. Keep an eye out for those 2 try traps. Whenever we see a real sharp reversal like that, a real sharp correction, or really any real strong move, I always look for that strong move up, shallow pullback, higher high in price, and that trap below that low. Again, the 1, 2, 3 reversal pattern is a little bit easier because you can see it happening, right? Mark that low, mark the high, mark that low, and buy off of that low. However, if we don't get that pullback and jump, if it just rips higher here, watch for that shallow pullback, that higher high, that trap below that low. And where's our target? Yeah, our target's pretty easy at that point, right? Back up to retest those highs from earlier on this afternoon. So a pretty good plan of attack here on the S&P tomorrow. Very big day here for both sides of this market. Can the buyers defend this bleeder, right? Can the sellers continue send this thing lower? Again, keep your eyes open for ranges and sell above the tops of those ranges. And again, don't forget to grab that free trading course I talked about linked up in the upper right-hand corner. Let's keep this party going though. S&P, pretty straightforward plan on the E-mini S&P here. How about the crude oil for tomorrow? What's going on with oil? Well, it looks like oil has also started to peel off its highs. Now you'll notice here, of course, we get that $40 big round number there, kind of sneaking in the corner there. You can definitely see the $40 barrel area probably going to be potentially a magnet for tomorrow. So we definitely do want to keep an eye on that. What happened today though? What happened? Market began a bit inside of a range. That range will act as a magnet. Remember, anytime we have a trading range on the chart, ranges act like magnets. We have this very strong run higher, right, in the pre-market today. And pretty much as about 9 o'clock, pretty much the market kind of went sideways here on us, right, as about 9:30, 9:15, right? They got their 1, they got their 2, they got their 3 legs up, right, and the market ran sideways. There were definitely buying opportunities on the way up using those, right, using those 1, 2, 3 breakout moves, marking the high, right, marking the low, and buying the low of those channels. But once we get the 1, 2, 3 legs up, it should be no surprise the market begins to go sideways. We talked about how these 3-legged moves work in last night's newsletter. Well, you'll notice, right, they had their shot to break higher here, and it didn't end very well. The market finishes with a very strong move down. Now, you could say at this point, we don't exactly have a 1, 2, 3 reversal pattern, right? It's not exact because that was a new higher high. So we don't exactly have a 1, 2, 3 reversal pattern yet, but we do have enough momentum in this shot going lower to really parlay into another leg going lower here for tomorrow. Remember, anytime you see a very strong move in one direction, you are probably going to see another leg in the same direction. So we do want to be looking for short trades here. We do want to be looking for resistance levels to get short at, and we have to assume our targets are down at that 39.07. They better hold that 39.07 though, because if you look left here, there is a lot of open space down here. If you look left here, there's a lot of open space right down to that. Where are we here? Boy, keep on going. You can just see, remember, this is that big move we started off from yesterday. So I'll tell you right now, these bulls, hopefully they can hold this round number. Hopefully they can keep the bleeding, right, from getting too badly here, because if they give back the 39, we're talking 37s here. Obviously, again, this is, very much down the road here. But, I would imagine there's a hurricane coming. If we get some headlines tomorrow saying the hurricane is losing strength, I would imagine, right, these bears will kind of be empowered by this hurricane falling apart. If the hurricane picks up speed, picks up strength tomorrow, right, we might see a reversal back up to the upside right now. So the hurricane, again, is a very big variable we're watching closely here in this office here at School of Trade. We definitely have bearish bias right now. There's no doubt about it. The market is clearly with a strong move down here. So we'll focus on being a seller at resistance. And I'll tell you, a lot of the plan for the oil is very similar to the plan here for the S&P, right? We know we get a big bear move down. We know we're going to probably get another leg in the same direction. So I'm trying to find areas of resistance, right? What I really like is to draw this trend line off this low, up around that high. That's probably my favorite area of resistance. In fact, you could say this whole area up here is really kind of the entire battle zone for us as we go into, or look to get short here for tomorrow. It's kind of the same thing though, right? It's a very strong move down. Right, very strong move down. So wouldn't surprise me if all we get is a little trap right above that high and back down again. So it's kind of the same plan we talked about on the oil. If all we get is a shallow pullback, I'll be looking for traps to avoid selling too low. Right, shallow pullback, I'll look for traps. If we get a much deeper pullback now, that's when I can stretch my legs. I can use those buyer failure patterns above the moving average into seller pullbacks on the way back down. So we definitely have, again, very similar plan we talked about on the S&P, right? If we can get a nice deep pullback, I would love to get these buyers to buy that pullback. We know exactly where their stops are. We can sell right into those stop losses. We can sell the pullback to the moving average, target, of course, at that low. And on a move like that, you would definitely want to leave a runner down to that 39.07 to get back down to retest today's low of day. So again, the key is going to be, right, do we see this market poke and then one try, lower low, two try for a trap high? I have no problem taking that trade whatsoever. I just want to make sure that I get that trap on it. At the very least, I'd want to get a double top on that, right? Just to make sure I'm selling as high as I can short, right? That's always one of the most important things. You want to sell at resistance. You want to sell high. So I'd like to get that trap high, or that kind of bull trap, right, if you will, there on a shallow pullback, or that deeper pullback is always where the money is, right? The deeper pullback is great because if we can get a nice strong push higher here, we might be able to get those buyers to almost think this thing has reversed again, try to buy that thing up again. And that's when we know exactly where stops are. We can sell into stops, right? We can sell pullbacks on the way back down, right? Buyer failure into pullback pattern as the market rolls back over. And then think about, again, targets down at that 39.07 here for the short. I would also remind you too that round number at 40. So, you know, there's very much possibility here. We may go up, we may come down, and we may just kind of sit here and go sideways, right? So, you know, think about what would the plan be if the market was to go sideways, really at any point. You know, I'll draw it right here at 40 bucks a barrel, but you know, this market could keep going lower and then go sideways on us. So just be aware, all of this will it's kind of waiting on to see how the market opens up here in just a few minutes from now, actually, right? So as we go lower, keep in mind, if the market does go lower here, I'll adjust that channel down. And we'll still look for that same basic idea, right? Those buyer failures, right, into seller pullback. So same basic plan. It's just we'll move that channel, right? That channel will get moved a little bit further steeper, right? So as the market goes lower, we will adjust our channel accordingly. One thing I do want to make sure you're ready for, though, tomorrow is a possible trading range. Right, if we do have a break, a bear market into a trading range, how do we trade a range bound market? There are three basic patterns I look for if the market goes sideways here on us. We've talked about one of them, right? I'd like to be a seller up above the top of that trading range. My favorite way to trade it is to wait for a break above the range, wait for those buyers to come in, get them to try to buy the pullback. At that point now, I can sell pretty confidently into those stop losses. We call those buyer failure patterns. And then there's two breakout patterns, right? The two breakout patterns I like to use are 1, 2, 3 breakouts, right? So strong move down, 1, 2, 3 breakouts. Mark the low, mark the high, find that channel, and get short off the top of that channel, right? So again, imagine now, here's your trading range, right? We go sideways, and again, this could be wherever really tomorrow on the oil, right? Then we make a strong move down, right? We break lower below the range. At that point, wait for the pullback. If you get that strong jump off the moving average, that's called the 1, 2, 3 breakout pattern. Okay, it could also be a reversal pattern as well. I'm going to mark up that low. I'm going to mark up that high, and that's where I can get aggressive, right? I'm not going to get aggressive on the first breakout pullback. The first one, you can't trust that one. Remember, the range is a magnet, right? Ranges are magnets. So we don't take the first one. The first one is less likely to be successful. The second one is the one you want to go hard on, right? As I always say, 1, 2, 3 breakout into hidden channel pullback. The first test is always the best test. Now, if I extend out that range a little bit further here, right? Pretend the range is bigger now, right? Another pattern would be is a 2-try breakout. So now this one has to be a big, strong move down. You want to see a shallow pullback to the moving average. Lower low in price, right? Strong move down, shallow pullback. Usually the shallow pullback will barely touch the moving average. That's the best part about the pattern. That lower low confirms the bears still have it. No rising support to worry about. We can sell short above that trap high. Remember, the key to that pattern is it's a shallow pullback. That shallow pullback doesn't give sellers a chance to sell high. That's why the next time it pulls back, that trap high, that's where you want to hit it. So again, 3 basic patterns, right? If you go sideways, a buyer failure pattern above those highs, right? Buyer failure above the high, 1, 2, 3 breakout, or 2-try breakout below that low, right? And again, you can see here how we are opening up, running lower, right? So what I'll do is I'll grab that low, I'll bring it up around this high, and now I can simply adjust my strategy now. Buyer failure, seller pullback, on the way lower, leave that runner right back to that 39.07. Do we go sideways? We have a pretty good plan for that sideways market as well. Now, how do we buy this market? This is going to be a tough one to get long with, because what's going to happen is if we do get a strong move up, if the buyers can hold that pullback and jump, see, this is the tough part. We've got to see enough strength here to get through these highs, because as you can safely assume, if I draw that trend line across off the bottom here, that's going to be a tricky entry, right? It's going to be right into those highs here. So what is the best way to avoid buying high, assuming that we don't just blow right through these highs? Because obviously, right, they could make my job pretty easy by running up, by pulling back, and just blasting, right? I mean, you know what I mean? If they just crush right through those highs there, we know the plan now, right? We know mark the high, mark the low, and we're buying off the low. Again, first test is the best test, right? 1, 2, 3 reversal into that hidden channel pullback, right? That's the idea with that reversal pattern. But let's say, for example, all we get is this. We make that run up, we get that pull back, right? The buyers buy it, and we're right here now, right? That's a nice, strong momentum move. I'll definitely give it to the buyers, but the problem is now that pullback here, it's a gamble, right? It's very much a gamble. We don't have enough evidence, right, of that strength. So at that point, when they retest the high, we know we're bullish again, right? Because, retesting the high there pretty much knocks out those bears. But how do we trade that, though? How do I avoid buying high? What you want to do is look for traps. Anytime you want to avoid buying high or selling low, like we've talked about so far already, right, on the S&P and now here on the oil, look for that deeper pullback and look for traps, right? Traps will always be my go-to entry whenever I have a concern about, again, in this case, buying high, right? Wait to get that trap below that low. If we have enough momentum running higher, there'll be plenty of buyers buying that trap low. So a couple scenarios to consider there on the S&P. The hardest part, on the crude oil. The hardest part about oil right now is as this market kind of keeps rolling, I'm going to keep on adjusting that channel down, and we'll wait for that short. Again, failure pattern, pullback pattern, right? As the market rolls back over here, and we'll certainly be watching for those trading ranges. Don't forget range-bound markets and reversal patterns, breakout patterns. We cover all of those setups in our free trading classes. Grab that link, the little information link there in the upper right-hand corner. Get registered for the free trading course, and don't forget all of the links you guys need are also in the description of this YouTube video. Let's keep this party going here. Let's keep this thing going. Oil's looking great here. How about some gold? How about that gold? Now, don't forget, as I mentioned before, I'm not going to be here tomorrow night for the newsletter. Thursday morning, if you're a gold trader, be careful Thursday morning because you got the ECB announcement on Thursday, right? Gold is always a bit of a bee's nest on those ECB announcement days, right? So just be aware of that on Thursday before the opening bell. Usually it's about 8 o'clock till 9:30 is when you got to worry on gold on Thursday morning with the ECB on Thursday morning. What else do we know here right now? Very bearish, right? We can easily see the market completely falling out of bed here. We talked about this, of course, in last night's newsletter. We were expecting, because of that 1, 2, 3, we're expecting, right, that trading range. We're looking to be a buyer underneath the range. We pretty much nailed the plan from last night's newsletter. So if you're watching last night's newsletter, you were ready to go to buy that dip on the gold. But you'll notice it didn't go very much further than retesting those highs. The market rolls over, right? And you can pretty much see here where I've got marked up, right? 1 leg down, 2 legs down. We're blowing right through that second symmetrical leg. Anytime I see this much strength in one direction, we expect to see another leg. So my job right now is I got to find my way in. I got to find my way to sell at resistance. My biggest question for tomorrow, though, is will this market time out and go sideways? That's definitely something you got to be expecting here just because of the size of that move. Right? Look at how far away the moving average is right now, right? So imagine that moving average may have to catch up, and to do that, right, the market may tread water here for a while and create that trading range. So be aware of that. Anytime we see a huge move, right, doesn't matter what market it is or what time of day it is, you got to anticipate sellers are not going to want to sell this low. Buyers are not going to dare buy this, and a lot of times that will produce that chop, that sideways, kind of that treading water as you go. Now, what I'd like to do is use some of these levels of resistance here. I've got shallow resistance at 1890. I've got my battle zone here. That 1895 area is a really desirable area. This whole area right there, 1895 there on the gold, 1896, 1897, right? Give or take some pennies there. That is really kind of the most desirable spot for us to get short tomorrow. What I want to bring to your attention, though, is if we get that pullback, where's the next objective? What I'll do is I'll use the size of that first leg down, and I'll project that, as of right now, I don't know how far the market will pull back. But let's assume it pulls back into that battle zone, right? That's going to tell you now where that next target will be. So just be aware of that, right? We're going to use that first leg down. It's one leg, it's two leg. They go through the second leg, which is very common. You'll oftentimes see them butcher that second leg, or if you're an Elliott wave theorist, the third, right? The third wave, if you will, right? In this case, it's a one leg, two leg, and if we can get that pullback here, I'd like to see this right on a third leg lower here. The ultimate objective, the ultimate target you have to think here for the bears is going to be that 1863, 1858. If I really zoom out a good distance here, remember that big range down there? We pulled back into the range a few weeks ago. Remember that range from earlier? We talked about that earlier in the month, right? This low here, look at how juicy that low is. A big, big carrot at the end of the stick, right? For these bears, 1851, right, is that low. But I'll tell you right now, the range, right? That trading range at 1860 or so is a magnet, right? That big range down there is definitely a magnet. So we're going to certainly use the measured move. We'll certainly use the measured move, but I'll be honest. If I can get into something here off the highs here, right, I'll definitely try to leave a little piece of this, right, just to tag along, right, down to that 1860 area, right, as we go. So we got a pretty good idea of where these bears are trying to get to. We know there's a lot of momentum for the bears right now, so we're trying to be a seller. We're also keeping our eyes open for a possible range, right, because we know the market made such a big move in such a short period of time. And without sounding like a broken record right now, a lot of this is very similar to what we said earlier, right? Now, one thing I would be looking for here on the gold, as we pull back here, I would look for those two traps. And the same thing may apply here on the oil as well. So imagine you got that strong move down. If we get a shallow pullback and a lower low in price, remember, a strong move, shallow pullback, lower low in price, you've got to be thinking everyone is watching above that high. What do we call that pattern? It's called a two-try trap, right? Because buyers try once, buyers try twice, right? The bottom line is, remember, what I really should call this pattern is a FOMO pattern, because when the market gives you that shallow pullback, the first pullback, remember, what the giveaway is that shallow first pullback followed by that lower low. If we get that shallow first pullback followed by that lower low, watch that trap high, right? That two-try trap pattern is certainly right on our radar. What I'd like to do is get this sucker up into these levels of resistance, right? Get this thing up into these areas of resistance. I'd love to see this moving average come down, get us to poke our heads up, get the buyers to come in and try to buy that pullback so we can sell into stops, right? We can sell pullbacks to the moving average before we go back down and retest that low. Remember, we get a strong move down. So any pop off these lows will likely be seen as a chance to get short. I just want to make sure I'm selling at a level of resistance. If all we get is a shallow pullback, right? Shallow pullbacks, look for traps. I don't want to sell too aggressively here. I know it's a very bear market, but I always have to follow that rule. Shallow pullbacks, look for traps, right? Again, look for that trap. It'll be just above a prior swing, just above the moving average. Look for that trap on a shallow pullback. But if we can get that nice, deep, juicy pullback now, right? Now we're on. Now we get the buyers trying. We know exactly where stops are. We're selling into stops. We're selling, of course, right, into pullbacks on the way down to retest that low. And then again, I would definitely try to leave a runner because the potential for a big, right, for a big sinking ship on this gold tomorrow as well. Buyer failures, seller pullbacks, and again, all of these patterns are talked about in a lot more deeper dive in that free trading course linked up in the upper right-hand corner, right? So two try traps, buyer failures around the top of that channel here. What if he goes sideways? We've got a pretty good understanding for a range-bound market right now, right? But, one more time here, if we do go sideways here on the gold, the good news is we've got resistance above us and plenty of space below us. So if the market does want to go sideways, we'll wait for that pop above the range. We'll wait for those buyers to try to buy that pullback. Look for those buyers to get stopped out. We can sell into stops for that. It's basically a breakout pullback failure. I just call them failure patterns. Look for that at resistance above the top of that trading range. Or don't forget the two breakout patterns, right? What was the first one? One was the 1, 2, 3 breakout. 1, 2, 3 move down. Find that low. Find that high. This will obviously be all based on location. But if we can get a strong 1, 2, 3 breakout, again, that's assuming that we go sideways, right? The assumption is we're going sideways. We're not continuing to go lower, or it's that strong move down, that shallow pullback, that lower low in price, and that trap, right, above that high. So three patterns here if we go sideways. If the market just keeps on rolling lower, again, as I mentioned earlier, watching that two-try trap is one thing, right? If it keeps on rolling lower, that two-try trap, that trap above the high will be gold. Well, literally gold and figuratively gold, right? That will be a great setup. If the market keeps on rolling lower, though, remember the bread and butter is wait for the pop, wait for those buyers to try to foolishly buy the pullback and just sell right into those stop losses. I will wait all day for one of those trades. Right? I never want to sell low as we're going, right? There's not a very good risk-reward ratio. You'll go broke trying to scalp your way down like that. Eventually, all the rookies will take their profit. The price will spike up. People will miss it as a reversal, and they'll get caught, and that's where you make your bank, right? That's where you make your bank, right? You're making pennies and pennies down here. This is the stuff that grows your account like a weed, right? In August, as they say. Now, last but not least, right? How do we get long on this thing? Very carefully, very carefully. We definitely got to see momentum turn. Way too much strength here right now to be a buyer. I want to see it up. Give me a strong move. But remember, that strong move, that could easily fail and right back down again. That's what we're hoping for. So buyers, you got to show us some proof and hold that pullback. Once you do, then we're on. Now mark the high, mark that low, and that's where I can get aggressive with that 1, 2, 3 reversal into hidden channel pullback. Targets, of course, at that point are back up around those highs. So a pretty simple, straightforward plan here for all three of these markets right now. I would anticipate some ranges just because there's such big moves, especially on the gold. Oil has a ton more space to go. Looking forward to a good day there on gold, on oil tomorrow. And the E-mini, will we get stuck around this 45.50 with a range? That is one of the big variables for tomorrow. Big session tomorrow morning, 8 o'clock Eastern time. We kick things off in our trade room. I would love to have you there with me. The easiest way to get registered is to grab the link in the description of this YouTube video. That'll take you back to the website here at School of Trade. Get registered as a brand new advanced member. If you need any help along the way with registration, don't be afraid to call me in the office. I'll be here to help out every step of the process. We got live support on the right-hand side, live chat on the left-hand side. Find the chat box, type the questions in there, or just pick up the phone and give me a call here in the office. And again, no newsletters for the rest of the week. I hate to leave you guys hanging out there. I will, of course, be here for all of our clients here at School of Trade, right? So you know where to reach me via email or telephone. As always, guys, thank you so much for tuning in. I hope by now you subscribed to our YouTube channel. I hope I've earned a couple likes on the like button here from you. And if you have any questions, type those questions in the comments section below. But for now, I will wrap things up. Have a great rest of your evening out there. As always, be well, be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.